Our next guest says if he follows through on that, it could be highly disruptive. Seems to be what the market's gaming out as well. Andy Laperriere is head of U.S. policy at Piper Sandler. Good to see you, Andy. And game this out for us. How do you think it would actually work in practice?
Well, I mean, I think that it's funny how a lot of people say that, Trump chickened out, but really the rest of the world chickened out except for China. But I think that in this case, Europe can't, right? You can't be strong-armed into giving up part of your territory. So I think the Europeans would have to respond vigorously. If the president went through with 10%, if he raised it to 25, you have Macron saying that they'd be looking at this anti-coercion measures. You've had the Danish fund going to relinquish its treasury holdings. I mean, I think you have to consider a really broad array of possibilities. And the U.S. and Europe are pretty economically integrated, so I think there'd be a lot of disruption.
Do you think even if I don't want to quite use the phrase back down, but if there's some other way that an outcome pleasing to him is achieved, that this all blows over? Or do you think that the Europeans now go, wait a minute, we've kind of just taken it for granted that we never have to rethink this relationship, this economic relationship, these investment decisions. And now they think, well, who comes after Trump? Is it Vance? Is it Rubio? Is it somebody who would be of a similar mind, either immediately after him or maybe down the road? And this now becomes something that could be a chronic issue, and therefore we have to make different investment decisions.
Well, I think you're seeing that, right? I mean, Canada just inked a deal with China, right? That's a big shift. And so I think that you're looking at, you're seeing other countries kind of de-risking away from the U.S., can't be too dependent on the U.S. I mean, I should say, I think the base case is that the president will accept an arrangement that basically that has already been offered, which is an increased troop presence, access to minerals in Greenland. So this probably doesn't go over the cliff, but if you just listen to what the president's saying, it very well could. But I think that in the sense of our trading partners, the die is cast in the sense that they are going to be diversifying their risk and their exposure.
Yeah, it's a little weird part of history, but I want to remind our audience it's not the first time the U.S. has looked at Greenland. 1910, there was a letter suggesting we buy Greenland. FDR looked at it. Harry Truman actually offered to buy it. Eisenhower thought about taking it. So it's kind of a continuation of a 100-year sort of eyeballing Greenland. It feels a little more serious this time. Of course, when you're living through history, it tends to. Andy, from a market perspective, though, is there a chance that one, I hate to use the term weapon, but one tactic Europe could use is to force European fund managers that own American stocks to sell those stocks, effectively drive down our market to cause us economic pain?
I mean, that is kind of what the anti-coercion measure that they have. But
that has never been. That law has never been used. Right. Ever been used.
Correct. I'm not sure, and it probably won't be. But we are looking at I think a real chance of that. And that's something that I think a year or two ago would have kind of been unimaginable that they'd be thinking about using it against the United States.
And in that case, I mean, even, all the unimaginable is now kind of more quickly becoming commonplace. So I think for investors, they go, okay, well, wait a minute. We're talking about these unimaginable tools and a break in a previously solid relationship, although at times a very contentious one, to be clear. European markets are going higher, except for today. U.S. markets have done fine. Is the fragmentation actually positive for corporations who now basically get double the customer set, double the clientele than they might have previously had?
No, I don't think so. I think, it's always good to try to put the happy face on things. But look, I think, protectionism reduces potential GDP. It contracts the economy in the long run. And, it's not the end of the world, but it's a negative. I think, the United States built this, free trade world that we used to live in for two reasons. One, we thought bipartisan Democrat Republican for a couple of generations that free trade's good for real purchasing power. People will be better off. And second, it promotes democracy and peace around the world. I think both of those things were true, are still true. And so I think what we're looking at is a headwind. And, I think we're looking at a lot of risks that, and the stocks keep going up, but there's a lot of policy risk out there.
We got to go.